Welcome, friends. Yesterday we have discussed about emergency fund. In that connection, traditionally Indian people used to have money in gold, or we can say gold used as a emergency. So whether that was right or wrong, whether we should have investment in gold or no. So let us discuss about the same in detail today. Before going in detail, let us see the gold situation worldwide, then it will be easier to understand. Actually, physical gold available worldwide is around 1,90,000 ton. Out of this 1,90,000, 50% is in the form of physical gold jewelry form. That means around 95,000 of gold is as a jewelry. So we can understand from this fact how much people is tilted towards having jewelry goods. Especially in India, we see especially women's craving for having gold. In Kerala, more prominently there, they are using gold. Other form or apart from 50% in jewelry, central bank all over the world held gold around 17%. And of course, the most by USA more than 8,000 ton. Around 13% is used as industrial purposes, different sort of industrial use. That is good. And of course, around 20% is in the form of some sort of investment, whether that is coins, bars, or underlying assets of ETF or gold mutual fund or digital gold. So 20%, it is also a huge portion, is used as an investment. So from this fact, we can see this is a substantial quantity. So if someone is using gold as an emergency fund, especially through coins or bars or ETF or mutual fund, gold mutual fund or digital, it is good in my view. We will discuss in detail how this is good. Second thing is jewelry form, whether that is good or no. In my view, one should not have, apart from requirement or minimum requirement or use in form of jewelry. Whenever you liquidate, you will lose making charges. That is minimum 10%. Otherwise, you will may pay 15 to 20%. It depends design and different agency or shops from where you have purchased. So you will lose substantial amount in the form of making charge. So it is not good idea to have jewelry as an emergency gold investment. Yes, of course, we can have in bars or coins. That will be good. Another question arises, why should you invest in gold apart from emergency? Is there any investment purposes? Yes, of course. People use this gold as a diversification. Whosoever use in equity, of course, this is a risky or too much volatile. So gold work like a hedging to those investment. Actually, whenever gold prices goes up, we see traditionally market goes down, or whenever equity goes up, gold prices are low. So it works inversely. So it works as a hedging, we can say. Our portfolio in equity not gaining or maybe down. That time you see gold is up and making some sort of balance. So it is good to have some portion, some people suggesting 5, some 10, some less. It depends upon person to person and one's risk appetite. But gold should be in portfolio. Some part, some portion must be there for diversification, for hedging. And traditionally from 1980 to up to now, only 8 years that was in negative. Otherwise, every year it has given some sort of return. And average return we can see 9.6% from 1980 till date. So it is a good also. 9.6 is a good return. Another thing is it is less volatile, not like a equity mutual fund or equity investment. So volatility is less. We can predict our gold prices in what when it will be, and we can have decent return. 9.6 is a decent return. If we are investing in a gold mutual fund or ETF, there is very less risk. Of course, if we are having physical gold, there is risk of theft. Again, we have to do some insurance or make keep in a locker. So that cost is there also. So we must have that in mind. As far as mutual fund concern or ETF, these charges are very less, around 1% or less than 1%. Fine. For ETF, 0.5 to 1%. In case of mutual fund, gold mutual fund, it will be 0.06 to 1.2% only. Sovereign gold, there is no charges at all. Only thing with sovereign gold bond is there is lock-in period of 8 years. Even if in emergency you cannot withdraw or liquidate. For liquidation of sovereign gold bond or SGB is 5 years. After 5 years, you can liquidate. If you want to sell, you may have to go the stock market route. That is difficult. So if you have minimum 5 year investment, then SGB is a good idea. You will get 2.5% return every year. Of course, tax is applicable, and whatever return that is tax free. Even after 5 years, that is tax free. So if we see taxation, physical gold, of course you have to pay 3% tax, and capital gains, of course you have to pay. If less than 3 years, if you are liquidating, then it will be termed as short term capital gains, and it will be clubbed along with your other income, and it will be charged accordingly as per your tax slab. But it is more than 3 years, then 20% will be, of course, this indexation benefit will be there, 20% will be tax. In case of mutual fund or ETF, same thing will be there. If less than 3 years, it will be short term capital gains, and gains will be clubbed with your other income, and as per your slab, tax slab, it will be taxed. If more than 3 years, then there will be 20% tax. As earlier said, in case of sovereign gold bond, there is no tax on capital gains. Of course, it should be minimum 5 year, or if it is 8 year, this maturity period, okay, then there will be no tax at all. If you are selling through market, then of course it will be termed as short term, less than 3 year, and your amount will be taxed accordingly as per your tax slab. This 2.5% return from SGB is taxed as per tax slab. Now question is how much we can invest, minimum how much. In case of physical, minimum 1 gram you have to purchase, that means around 6,000 you have to invest. These are tentative figure. It depends upon gold price, fluctuating gold price there. Gold ETF, of course, minimum 5,000, almost equal to 1 gram of gold price. SGB also minimum 5,000 investment. Government of India notifies time to time, only then you can purchase sovereign gold bond. And minimum is 1 gram gold or equivalent to that, and around 5,000 it will be maybe less or more, little more. Whereas gold mutual fund, it is started from 100 rupees onwards. Maximum, of course, there is no limit in anyone. So if we see all this, if you have longer view, in my view, sovereign gold bond is best one. Apart from appreciation, price appreciation, you will get 2.5% fixed return every year. One. Second thing, your capital gains is tax free. Whereas in case of a physical or even gold ETF or gold mutual fund, everywhere you have to pay tax, whether this short term or long term, depends upon your investment horizon. So in my view, if longer view, then go for sovereign gold bond. Otherwise, for emergency purposes, one can have coins or bars. Whenever required, one can easily liquidate. Even ETF, whenever this market is open, any day gold ETF or gold mutual fund can be liquidated or redemption can have from gold ETF. That will also work as a good emergency fund. So this is overall gold investment scenario where you can have for your diversification purposes, for emergency purposes, and of course for hedging purposes. And this is also giving a good decent return. So that purposes you can also have. This is for from today. If you find value, please do subscribe to this channel and share with your friends, colleagues, so that they can also get benefit out of this such videos. Thank you. Bye bye.